All right. Okay, so this is for Nesto and Gal. So I'm gonna go over the very simple way to find the strategy and setup within the markets every time you trade. Okay, because I feel like a lot of confusion comes. The only confusion comes from market structure itself. Okay, so we're here to change that because, to be honest, market structure is one of the most underrated things in the market, and it's hard to believe that when it is literally what the market is. So if you just follow what the market is, I mean, you are gonna be just okay. So I'll show you an example here on GBP CAD. Okay, so when you go to the hourly on GBP CAD, what's the first thing you notice here? Okay, we're gonna simplify market structure down for you. So every low point is a specific low, and every high point is a specific high. As long as you see consistent highs being formed, these are all considered higher highs because this is a bullish market. Why is this a bullish market at this area? Because right here is a bearish market. So I'm going to go ahead and draw a line, split it down the middle where it begins bullish and where it ends bearish and begins bullish. So that is the line right there where it ends bearish and starts bullish. Ends bearish, starts bullish. Okay, why is this the ending of the bearish market? Because here we have lower lows being formed. Then we have this low down here, which is a lower low. So if we have a lower low being formed here, these are the lower highs. Lower high, lower high, lower high, lower high. Why are these lower highs? Because this high is higher than this high. So therefore, this one is lower than this high, so it's a lower high. Because this one's a lower low, because this low is lower than this low. So this is our break of structure here. Break of structure right there. This low and this low are not the same. This low broke this low, making a new lower low, breaking structure, lower low. So here we have a lower low. Here we have a lower low. Here we have a lower low. And here we have a lower low. Okay. So these are all our lower lows. Okay. Lower low, lower low, lower low, lower high. So every high above these lower lows are our lower highs. Lower high. Lower high. Okay. So now this lower high needs to be respected, and it did right here. This would have been a proper lower high, and it could have continued bearish structure to the downside here, but what ended up happening was it got disrespected and got broken and made a higher high. Why is this a higher high? Because this high broke this high and made a higher high, a high higher than the previous high, making it a higher high. So now we can anticipate that the market is going to continue bullishly since we just had a change of character. All a change of character does for us is allows us to know when the market is shifting the direction it's going in. So we shifted from bearish to bullish, and now I'm anticipating market to continue higher. So now at these areas here, you can see that we made bullish market structure, and it continued to the upside. Structure is not always going to be the cleanest thing in the world. It is not always going to be sunshine and rainbows and doing this consistently. It's not going to be doing that all the time. You can see here at these areas, it ranged. This is just a consolidation range before it continued to make a higher high. So once it consolidates and expands, we can look for areas to buy from, given these indecision candle areas right here, these indecision candle areas, and it can continue that buying momentum. Why would we be looking for a sell in a bullish market? It wouldn't make any sense. If we just made a new higher high, and especially we're looking at the hourly time frame, if we made a higher high in this structure, why would we be looking to sell when the market is making higher highs. This is a higher high. 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 This one's a higher high. And this is a higher high. So we know that every low point before these higher highs would be a higher low. So higher high, higher low. This is a higher high. This is a higher low. This is a higher high. This is a higher low. So if we're looking at it from left to right, this is our higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So what happened? And what do we need to see a proper change of character? This is our higher low. So I think a lot of confusion comes from seeing all this choppiness on the inside, okay? All this choppiness, all this back and forth right here. You can see how it's just really like boom, 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 boom. Try not to pay attention to that. Connect the highs and the lows. This is a high, okay? So connect it to this low. This is the low. Connect it. This is the high. This is the highest high above this high. This is the low. Connect it. This is the highest high above this high. Okay? Now, connect these dots. This is the high. This is the low. Connect it. Connect these dots. Okay? This is the high. This is the low. Connect these dots. Now connect these dots. And what do you have? Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high. That is it. Simplified market structure. Okay, so now if we go back and we look here, what happened? We were just connecting higher highs and higher lows. Oh, where's our higher low? Psh, this don't look like a higher low to me. This looks like a what? Lower low. So now that we identified our high and our low, this low is way lower than this low. So what do we think that is? A lower low. So if we were drawing this, and then out of nowhere at this higher high, we did this. This is the higher low. This is a lower low. That means we changed character here. So now that we changed character here, we can anticipate what? What's the next market structure we can anticipate? Lower highs and lower lows, because the market has now shifted. So now that the market has shifted, connect the dots. This is the highest high after this lower low. So this is our lower high. So because this is a lower high, because we are below this high. Okay, so this is a lower high. A high lower than the previous higher high, making a lower high. Now, what did we do? We made another. What's the lowest point? What's our new lowest point in this area? Okay, before I draw it out for you, I want you to look at the screen and point at it with your finger. You know, whatever you need to do, just identify the lowest point, point at the lower low, and then I'm going to do it. So now this is the lower low. So connect these dots. Connect these dots. Now you are able to ignore all of this inside nonsense. You're able to ignore it now because you're simplifying the structure for yourself. Where's the lowest high now? Right here. High. Where's the lowest low? Low. Connect these dots. Connect these dots. Now, where's the new lower high? Right here. And where's the new low? Right here. Connect these dots. Connect these dots. So, now you have just drawn yourself market structure simplified. Okay. Super simplified. If I zoom out and I look at it from a distance, you can see how simplified that is now. You can see the structure now. You can see it with your eyes now. You don't have to focus on all these nonsense candles going on the inside doing this, back and forth, back and forth, back and forth. You can see the structure now. Boom. And now you're like, whoa, I can actually see the structure now. It's so simple. It's been this simple this whole time. It's absolutely been this simple. So if I draw this exact thing out on the left, right here, with this clean line art. If I look at this structure here, okay. Hold on, my brother's calling me. What's up, brother?
What's up, brother?
What's up?
Baby asleep or what?
I think so. Is he asleep? No, not yet, bro. I'm making a video real quick.
Video for what?
Market structure.
For what?
Market structure, explaining the basics of market structure.
Oh, you're making YouTube videos again?
Yeah, just for teaching people.
Oh, for sure.
Yeah.
I just want to see what's up, see if you fell asleep or not.
No, not yet, bro. Not yet. I'm waiting for him to go to sleep.
Alright, well, I'm not going to go to sleep. I'm probably going to stay up all night, so.
Okay, brother. Sounds good.
Alright, brother. Talk to you later.
All right, we'll talk to you later. Okay, so you can see here at this example, this is exactly what happened here. It's the same exact thing, except you don't have all that nonsense of candles doing this and this and this and this on the inside of this structure. All you have is the clean structure. So that's what you want. You don't want to have all that nonsense going on. You want to simplify it for yourself. So I'm teaching you how. You just grab every high point and every low point and connect the dots. Every high point, every low point, connect the dots. High point, low point, connect the dots. High point, low point, connect the dots. So you can really see what happened. You can see that clear change of character. Okay. You can see that clear lower high. So now we shifted market structure. So that is it. That is all you want to do for yourself. You don't want to make it complicated. People overcomplicate trading. Do not overcomplicate it for yourself. So now we've simplified trading. So now we can go get into the strategy. Okay. So now that we've identified that the market has shifted, when we look at the market and we're like, okay, we're looking for sells. Okay. So let's go look for some sells. I need to get rid of all this. Let me make it easier for myself and remove all drawings. Okay. So, if we're bearish, if the market is bearish, would we be looking for a sell or a buy? Answer it yourself. I know I can't hear your answer, but answer it, and then I will tell you the correct answer in 5, 4, 3, 2, 1. It's a sell. If you said a buy, I need you to turn off your computer, go to bed, wake up in the morning with a fresh mind, and answer that question again. Okay, so we're looking for a sell. Why are we looking for a sell? Because the market is downtrending. Downtrending markets mean selling, going to the downside. Why would we be looking for a buy if the market is going down? I mean, why do people counter trend, bro? Like, why do people counter trend? I really don't get it. So, we're not going to counter trend, especially if the market is heavily bearish, like heavily. We are making consistent lower lows. You can see this lower low. You can see this lower low. You can see this lower low, okay? So, now that we're making consistent lower lows and lower highs, we are looking for a sell. So, if you remember the time windows that I gave you, you remember that we go into the market at 11:30, 12:30, 1:30 London. We go into the market at 5:30, 6:30, 7:30 to 8 New York. So let's go into the market at those times in this area. So this is where I was at in the current market. So let's see if we can see a setup. So first thing I identify, Asian session liquidity. We swept the high of Asia. We broke structure, made a lower low, swept the low of Asia. Now, At this point, it's 2330, 1230, 130. Our window's over. There is a setup. What does that setup look like? We already closed below this low at 1 a.m. At 1:30, we now have a setup. Why do we have a setup? Because we did exactly what I look for. Structure, liquidity formed, Asian session, boom. Then a sudden sweep of the structure. Break of structure or change of character. There is also imbalance, which is another good confirmation because it gives market something back, something to come back up to. Because when there's imbalance, the market has motive to come up to this area since there is imbalance. So now imbalance is in this area. Then what do you notice happened again? Asian session formed. That is another draw on liquidity. So we have another Asian session forming. We swept the high of Asia and we tapped into our area of supply. Why is this our area of supply? Because it's a huge hourly indecision candle. Okay, boom, right there. So what makes this S plus? This is an S plus setup because one, the biggest confirmation is the market is going to the downside. We are downtrending. So we are looking for sells at a lower high level. This is our lower high level right here. This is a lower high and a setup formed. Because remember, at every lower high, there's not going to be a setup. You can see at this lower high right here, there's no setup. This is just choppiness. Asian high never got swept. It only got swept at the downside. There was no setup. This Asian high never got swept. Just bunch of consolidation. So, and this was the higher high. So higher high, lower low. Lower high, there was no setup. Lower low. Lower high, there was a setup because the Asian high got swept. Then we changed character or broke structure, broke structure right here. And then boom, broke structure. Then now all we're gonna wait for is a retracement back up to the supply zone, this indecision 1 hour indecision candle, and then take our sell. Now, as far as take profits happen, my take profit would be this low. Why would my take profit be this low? If we're in a bearish market, why would I be targeting the previous low? Answer it yourself. Okay, answer that question. If I'm in a bearish market and I'm selling at the setup lower high, and we just created a new lower high. So it went from lower low to lower high. If we caught the lower high and we're selling, why would I target the previous lower low? Answer that question, okay? Remember bearish structure, okay? So the reason why I'm targeting the previous low is because bearish market structure goes lower low, lower high, lower low. So what did I already tell you to do? Connect the dots. This is the low. This is the high. Connect the dots. So if we have a lower low, lower high, and we know bearish market structure is lower low, lower high, what comes after a lower high? Lower high. What comes after a lower high in bearish structure? Lower low. So, boom, sell off to the previous low to make a new lower low. That is exactly why I sold off and targeted that previous lower low, because all we did was follow structure to make a lower low. So that would have been an S plus setup to take right there. So that is the basics of this. So now let's go over to odd USD. Now odd USD looks like a mess, I know, but I will break it down for you right now. So here we're in the hourly, okay? So remember, structure doesn't always have to be the cleanest thing in the world, but we're gonna grab every high point. This is a high point. Let's clean up the chart. Let's take off Asian session for now. So this is a high point here. This is a low point here because this bearish candle is a pullback. So that's our pullback. High point right here, low point right here, pullback. High point right here, low points right here. So if we connect these dots, what does it look like happened? Like what does it look like happened right here? It looks like it changed character to me, if you ask me. If I draw this example out to the right, you tell me what it did. You know what I mean? Like, you tell me what it did. Higher high, higher high, higher high. This is our previous low. Remember structure. If that low gets broken, that is no longer a higher low. What is that considered? A lower low. So, that is a lower low indeed. So, we have identified a change of character. But, remember, this could have just been any random lower low. It didn't matter. There has to be a setup and motive. So, that's why we have our Asian range. So, Asian session liquidity. The high has been swept here. Then, all we want to wait for is a change of character. Here, we had a change of character. We already established that change of character right here. This is this. Okay. Perfectly lined up. Okay. This is this. So we have a change of character. Okay. So now that we have a change of character right here, this is our lower low. All we want to wait for is a retracement back up to supply to target this Asian low. This Asian low right here. Okay. There's nothing that we do now. Nothing that we do. We're not in the market anymore. Once you have an S plus setup, you get out of the market and you put a pending limit for that S plus setup and you let that thing play out. You do not go looking for more setups. Stick to one S plus setup. If you have 3 C minus setups, but you have one S plus setup, you have a high chance of 2 of those C minus setups failing and 1 of those winning, and then you don't even make any profit. And then that whole time I was taking the S plus setup and I caught way more pips and way more money than you did on 3 trades, on 1 trade. So stick to the S plus setups. Why is this an S plus setup? We swept out Asian high like I talk about. Then at our time window, 130 right here in between these 2 candles, this red and green candle, there's 130 right there. There's no setup. So we come back the next time window. Okay, when's our next time window? 5:30. Boom. No setup still because this hasn't fully changed. But by New York Open 6:30 a.m., our setup has fully formed. Boom. Lower low right there. So now all we do is wait for retracement. We have now formed an S plus setup because we have drawn liquidity to the downside. We have our change of character right here. And in the 30-minute, the structure looks so clean. The structure looks so clean. Oh my gosh. Like, it looks so clean. So, higher high. Higher low. Connect the dots. Higher high. Higher low. Connect the dots. Higher high. Lower low. Connect the dots. Connect the dots. Connect the dots. So you could have seen the structure very, very, very clearly. Okay. So now that we've identified our change of character, we've identified our lower low, we need to identify a point of supply to sell from because a supply means sell. So indecision candle in the 1 hour. Let's see what happens if I fib out for security. I don't fib out anymore, but let's see what happens if I fib out. And look at that. 79, 70.5 levels have this indecision candle in that area. So we're going to go ahead and grab that indecision candle right there. And look at that. Not rocket science at all. That's our entry. Our take profit at this low. And not only that, we formed new Asian session here. Swept out the highs. Could have targeted this low right here. We could have targeted these equal relative lows right here. We could have targeted that final Asian low, which I did. So there was 3 take profits here. If you're a partialing out type of person, you could have partialed out, but I personally don't partial out. I just like to ride my trades to my TP for a 1 to 4.36. And that is it. You put a pending limit, you forget about this, and you let it play out. That is an S plus setup. So structure does not have to be difficult. You can see here in the hourly, okay? Here in the hourly, we had connect the dots in this current range, okay? Connect the dots. If we're making lows lower than the previous lows, what are we making? We are making lower high, lower low. If this high is lower than this previous high, that's a lower high. If this low is lower than this previous low, that's a lower low. Connect the dots. Lower high, lower low, lower high, lower low. Okay? And if it helps you, draw this same thing out on the left so you can see it clearly. And you're like, oh, okay, yeah, that is bearish. It's going down to the downside. So that is bearish. Okay, so those are lower highs and lower lows. Let's check for a change of character. Oh, look at that. Higher high. Why is this a higher high right here? Because this high is lower than this high. So that makes it a higher high. This high broke this high. So that's our change of character right there. So boom. I know now we have a change of character. We should go to the upside. And look what happened. We went up to the upside. But then, time and price. This is why I talk about time and price. We have specific time windows that we trade. If there is no setup within those specific time windows, there is no trade. So you can see within our time windows at 6:30 open, there is a setup. So this is an S plus setup. Change of character, supply, Asian lows, a lot of liquidity to the downside, just a lot of confluences lining up with time and price. So then all we do is wait for that area to get tapped into and you take that sell. So that is why this played out. So let's go on over to, I think, Euro odd. Yeah, Euro odd. So check this out. So this is the hourly. If I go to weekly, okay, what do you notice about weekly? Okay, weekly just made a higher high. We just made a high higher than this high. So we made a higher high here and a higher high there. That is giving me ideas that maybe we're looking for buys. Maybe we're bullish on Euro odd in the weekly. So maybe looking for a huge buy opportunity would make a lot of sense. So yes, it did make a lot of sense indeed. You can see here we have this beautiful setup, sweep of these lows, a big push to the upside, making a higher high, indecision candle. So boom, that could have been our entry, but an even better entry would have been here, looking at this structure in here. So what do you notice about this structure here? Couldn't have been daily. It would have been like probably like 1 hour or something. Oh no. This was a huge buy. Oh my gosh. So you notice this huge buy. Why did this huge buy play out? So we already know that the weekly is bullish. So once the hourly, once price tapped into this weekly zone, which is this huge gray zone below us, you can see that huge weekly zone. What did we make? Okay, let's look at structure. Okay, so we're looking at points. We're not looking at all this nonsense. We're not paying attention to what's happening here. We're paying attention to the points themselves. You can see that this is a low and this is a low. This low and this low are broken. This low broke this low, making it a lower low. That's bearish. But right after that, we had a huge push to the upside, breaking this high. This is the high, this is the low, connect the dots. That is our lower high, that is our lower low. This high broke above this high, so making it a higher high. Okay, so if we just made a higher high, what do you think is going to happen? Well, we're going to continue up. So we wait for price to tap into a demand area and target resting liquidity. But the take profit could have been based off of the weekly, since we are bullish in the weekly. So you could have held this trade for 1, 2, 3, 4, 5 weeks. A 5-week trade hold targeting the previous high. Why are we targeting the previous high? Because bullish structure says higher highs and higher lows. Whenever a high is made, a higher low will be made. But after every higher low, a new high will be made. So targeting this previous high makes sense. And you can see, ran through the take profit for a 1 to 26 ratio. That means I risked $1 to make $26 back. Pretty amazing. So that is the very, very simple breakdown of structure. Structure is the same amongst every time frame. Let's go check out USD CAD. See how it's doing. So you can see monthly here. We're looking at the monthly. We're consolidating a lot here, but this high broke and closed above this high. That makes it a higher high. That makes this a higher high. Okay, why is this a higher high? Because this high is higher than all of these highs. This high, this high, this high. This is a huge higher high. So now we're looking at the structure here. Higher high. So that means that the low point here, this is our low point, lower, higher low, higher high, connect the dots. Then this low got broken by a huge what? What is this called? Lower low. Oops. Change of character. So now, waiting for a retracement back to some supply areas. And you can see, lower low. What should happen after a lower low is created? Lower highs and lower lows. So that should happen, right? So this is our lower low. Now, this is our lower high. So what should happen at this area? What should happen, in theory, is a new lower low should be made. Okay, so that is all we're waiting for right now on USD CAD. That's what I'm personally waiting for. So now, if we go back and we look at the structure here, you can see here. What are we looking at on the monthly here? A high point, a high point, a high point, high points, high points, high points, lows, lows, lows. So if we connect all these dots, if we check all these points, what is this making? Lower lows and lower highs. So what happens at this point here? What is this? If this high right here, lower high, got broken, what is this line called? Connect these dots. Higher high. We can anticipate that the market has shifted. It's a change in direction. So we can anticipate a what? After a higher high, we can anticipate a what? What comes after higher high? It goes higher high, higher low. This is the low. Remember, this low never broke this low, so it is a higher low. Then, what ended up happening? Boom. This huge higher high broke this high. So now we can continue that structure. But remember, this is the monthly time frame. Oh my goodness. You may be looking at this and being like, oh, okay, what's the big deal? This is the monthly. So if we look at how many days this actually bought up, it bought up for 1,705 days. This is a 1,705 day hold. So when you put that into perspective, you really kind of get a feel for that. You know what I mean? So pretty crazy. Pretty crazy if you ask me. So yeah, and that's just using basic market structure. But you can see overall USD CAD is bearish because we have shifted the structure here. So I'm anticipating sells when we get up here. But from where we're at, we should get pullback to make a new high. Maybe tap into this area and sell off again. I don't know because we did just have some equal highs up here as well. So I'll wait till we get here. But for now, that is the basics. So looking at USD CAD monthly, looking like some clean areas here because we have some relative equal highs here. We have some liquidity. We have this break here. The market on USD CAD as a whole opened up bullish. We started with higher high, higher low, higher high, because you can see higher high, higher high. This is a higher low. This is a higher high. This is a higher low. Then we have some highs being made. Higher high up here. This high broke this high. So this is a higher high. And then we broke this low right here, making a lower low. So we can potentially wait for a pullback into this area up here to then sell off and make a lower low. Because monthly as a whole is bearish. So I would wait for a sweep of these equal highs here. I would wait for a sweep of liquidity there, and then a pull in there, and then to target these lows right here. So this is a 912 pip stop loss. This is a 6,000 pip take profit. So this should be a humongous trade. Huge trade. So we'll wait on that. We'll see what happens with this. Maybe we revisit this one day. No time soon. This is 6 months time frame. This 6 month candle still has 4 months to close. So the chances of this playing anytime soon are very low. So maybe in the near future, maybe in the future, maybe in a few years, we will revisit this setup and maybe even have taken it and caught a huge bag on it together. So that is basically it. That is the basic breakdown of the strategy plus a basic market structure video to help simplify market structure for you.